Alright, for this video I want to go over a sample IT-203, which is a non-resident and part-year resident income tax return for the state of New York. So in this example we have our taxpayer here, Jacob Q. Taxpayer, who is a full-time resident of Florida, but Jacob has a New York rental property, which requires him to file this form, and he has some other New York source income from when he was traveling there throughout the year. So we'll go through the full IT-203 here. I've also got the Form 1040 for Jacob. We'll go through this as well to see how things are reported on the federal return and how things need to be reported on a non-resident New York return. We've also got the IT-203 instructions here, which are certainly helpful in completing the form, but we also really need these to look at the tax table schedules to figure out how much tax we're going to owe in New York State on that income. And then lastly, I've got one slide here covering some background on the fact pattern that we'll be looking at, and then some New York notes specific towards non-resident filers, right? So if you've got to do an IT-203. So let's start with reading the fact pattern first, and then we'll get into the federal return and then the New York return. So our taxpayer here, he's a single filing taxpayer and full-time resident of Sarasota. He works full-time as a consultant, and his W-2 earnings for the year were $120,500. Now, for the New York source pieces, it's these two bullet points here. So first, Jacob purchased a single-family home in New City, New York, and rented it out to a tenant. He paid $650 for the property and upgraded some of the items inside for $32,000. Now these upgrades can be characterized as personal property, right? So you're eligible for bonus depreciation on those items. However, Jacob was advised to elect out of the bonus depreciation because New York does not conform to federal bonus depreciation for one, but New York also has this kind of strange trap where if you claim the bonus depreciation and then adjust for the makers or straight line, it actually shows a lot of kind of phantom New York income, and so you pay a lot of tax. And so for those reasons, non-residents and even residents will often elect out a bonus depreciation for that reason. But we'll get to more of that later. So he elects out, he uses makers instead, and then he does take the position that he doesn't actively participate in the activity. So for federal purposes, if you're familiar, you get that $25,000 allowance where if you have a passive activity related to rentals, you can deduct up to $25K. He's not going to take that. So he's going to treat this as a pure passive activity, and so there's going to be some passive activity loss limitations. And then the last New York piece is in October, he flew to Albany for a conference where he was a presenter, and he was paid a speaking fee of $1,500 for being there. Now, he's not regularly engaged in this business of giving speeches or presentations, so his position is that, well, it is taxable income, but I'm going to treat it as other income, so it's not going to be self-employed earnings, so I'm not going to pay self-employed taxes on those earnings. I'm just going to treat it as other income. All right. Now, the New York, again, as I highlighted above, they don't follow the bonus depreciation rules, so but they do allow for makers, and so we're going to use the makers depreciation on these items. And then New York does follow the passive activity loss rules that we would see for federal tax purposes, so Section 469 of the Internal Revenue Code. So similar treatment there, but non-residents and part-year residents, they have to separately calculate your passive activity losses and your income just by basically bifurcating what is truly New York source. And so we'll look at that how that ends up on the return as well. All right, so let's have a look at the federal return and see how these items are treated for federal purposes, and then how everything gets kind of translated onto that New York return. So we've got his W-2 wages up here, the $120,500. We can see he's got some investment income down here. All of this will be taxable for federal purposes, but because he's not a New York resident, none of that income is going to be taxed in New York. The speaking fee engagement, the other income, He's reported that on Schedule 1 of his 1040, so speaking fees, $1,500. So it is being taxed for federal income tax purposes, but he's not doing a Schedule C. It's not subject to self-employment taxes, but he is including that there. Now the rental property, so he completed Schedule E for the rental property. We've got the rents, all the various expenses there, the depreciation expense. So his depreciation expense, again, we're not including those improvements in Part 2 for the bonus depreciation, right? It's just being depreciated under the makers tables, right? So 200 dB, 5-year, half-year convention. And so, again, that'll be a permissible method for New York purposes. Now, because we do have an overall loss here, right, $2,518, that is a passive activity loss, so we have to do the Form 8582 to compute our passive activity loss limitations. So the 2518 isn't being deducted for federal purposes. It's being carried over to next year, where it can be potentially used to offset profits from those activities in future years. All right. Okay, so now all that's said and done, how does it look on the New York return? So our IT-203 here, we've got Jacob's first name, middle initial, taxpayer, report the date of birth, and his contact and mailing address in Florida. New York County of Residence and School District NR is appropriate for a non-resident return. Just to indicate you're a non-resident there, right? You don't live in the state. His filing status is single, so same as federal. He's not itemizing deductions. He's not a dependent on another return. And he does not have any foreign financial accounts, so all those are no. Now, the right side here, he's not a New York City or Yonkers part-year resident, so those are all blank. And he's not a part-year resident of New York State either, right? He is a full non-resident of New York State. So question H, did we maintain living quarters in New York at any point during the year? The answer is no, right? He had that one trip to New York for the speaking engagement where he had a hotel, but that does not constitute living quarters, okay? All right, so on to page 2. So the federal side here mimics what we see on the federal tax return. So we've got the wages, the investment income, capital gain distributions. We can see his speaking fee down here on line 16 for other income. And then line 11, rental real estate income or loss is 0, right? Because he has a passive activity loss, which is being applied. And that is being separately stated here on line 12. So there's his 2518, but notice none of it is being deducted in the current year federal AGI calculation, right? It's being suspended as a passive activity loss activity. Now, on the New York State side, same treatment, right? He's got a New York State passive activity loss, and so line 11 is also 0, and all of these are 0 as well because none of these income items are attributed to New York State, right? He's not a part-year resident, and none of this income is earned while he was in New York, so all of those are going to be 0. But the one thing that is being attributed to New York State is that speaking fee, right? That fee he earned while he was physically present in New York State. He was paid to come up there and speak. And so it's appropriate to attribute that $1,500 to New York State. Now, the passive activity loss, New York does have its own form of the passive activity loss limitation schedule. So instead of the 8582 for federal, we have the IT-182. Very similar format to what we see on the 8582. So we've got all other passive activities here, right? So they have their active participation section for rental real estate, but remember, we're not taking that position. So it's just another passive activities with net loss. There's the minus 2518. And so that is the amount that's going to be carried forward again to future tax years. So we've completed the rest of the parts here, right? So part 5, the amount of current year net loss, overall net loss, and then the allocation of those losses that is being applied carried forward to subsequent tax years. So none of this is being allowed, right? So description of the activity, the loss, unallowed loss, right? So none of this is being applied in 2022. All right, so if I go back to the form, so now that we've suspended those losses, we have our New York AGI. We have $1,500 attributed to New York State. $124,482 is the federal piece. And so now we calculate the amount of tax that we're actually going to owe on that New York source income. So as a single filing taxpayer, he does get the $8,000 standard deduction. So his New York taxable income is $116,482. And so now we calculate the New York State tax on all that income as if he was a resident. So that's how New York State wants you to do the computation. Calculate the total base tax and then apportion that based on the amount that's actually attributed to New York State. So in order to arrive at this value, we've got to look at the tax tables and figure out how much we owe or how much we would owe on that $116,482. So if I go to the New York form instructions, we'll start down here where the tax tables are. So if your New York State AGI is more than this 107 figure, you use the New York State tax computation table. So if I scroll down to those tables, we're going to be working in what worksheet here? Worksheet 7, right? So single filers, if our New York AGI on line 32 is more than 107,650 but not more than 25 million, and our taxable income is 215,400 or less, right? So this is where we live here. We need the worksheet number 7. So you can see I've already pre-populated the numbers to make this easier, a little faster going through it. So lines 1 and 2, we've got our New York AGI from line 32, our taxable income from line 37. So if we go back really quickly here, you can see New York AGI on line 32, and then the New York taxable income on line 37. So that's where we're pulling those amounts. So we've got our 124,482, 116,482, multiply line 2 by 6.25%, so we get 7,280. Line number 4, they want us to calculate the New York State tax using the tax rate schedules above. So if I scroll back, okay, so this is the New York State tax rate schedules. So in this table here, right, we're a single filer. When we look for our taxable income range, we're between $8,650 and $215,400. So the tax we owe using this schedule is $4,504 plus 6.25 of the excess over $8,650. So this tape here, you can see I've done the math for us. We've got $116,482 minus $8,650 leaves the excess of $35K times 6.25% gives us $2,239 plus the $4,504 leaves us with $6,743.5, or if we round up, $6,744. So if I scroll back to the worksheet 7, enter on line 4 the 6,744, and then we just continue doing the math as asked in the worksheet, right? So line 5, it's asking us subtract line 4 from 3, we get $536. Line 6, it's asking us to enter the excess of line 1 over 107,650. So the excess of 124,482 over 107,650 is 16,832. Divide line 6 by 50K, we get 0.3367. And then multiply line 5, 536 times 0.3367 gives us $180. And then the very last step there asks us to add lines 4 and 8. So we add 6,744 plus 180 gives us $6,924 in tax. So that is the number we throw up here on line 38 is $6,924 in tax. So that is the base tax that we owe on this New York taxable income amount. Now, of course, you're not paying that amount of tax, right? Because it needs to be a portion for what is actually your New York State source income. And so all of that math is done down here on line 45. So we've got our New York State amounts from line 31. That's the $1,500. The federal amount from line 31 above, right? Line 31's up here. The federal amount, $124.42. So when we divide, we get 0.0120, which is effectively 1.2%. So 1.2% of our federal income is attributed to New York. And so now we take 0.012 times the tax, $6,924, and we're left with $83. So $83 is the amount of New York State taxes that Jacob has to pay on this New York State income. So he doesn't have any credits or withholdings, other payments that were made. So that's why all these amounts here are just blank. So the amount that he owes on line 70 is going to be $83 in taxes on those earnings, effectively just from that speaking fee, right? The rental property was an overall net loss, and so for that reason, he's just paying taxes on the speaking fees. All right, so that covers it for this tutorial. I hope that was helpful. If you have any questions, please leave a comment below, and I look forward to seeing you again on the next video. Thank you.